If people hold off on buying new cars due to rising prices, will that leave them with extra money for other items? There's a bright angle. Our next guest has a new note saying the consumer overall is holding up better than expected, despite all these inflationary pressures. Anthony Chukumba joins us from Loop Capital. Anthony, glass half full. Tell us.
Yeah, so I mean, when you look at the broader macroeconomic data, it's actually quite good. I mean, inflation has ticked down last month. The labor market is still incredibly strong. We're still seeing pretty decent wage growth, and it looks like we're seeing some significant green shoots in the housing market. Existing home sales have been up year over year for the past 5 months. New home sales were actually up last month as well. Look, consumer confidence is lagging. That is the one thing that I am looking at. But for the most part, we're seeing a lot of encouraging macroeconomic data.
Like what?
Well, as I said, I mean, look, I mean, folks are working, folks are making more money year over year. One thing that I've looked at is the fact that inflation has been lower than year over year wage growth for almost like 2 years now. So purchasing power is actually getting better. So I think we're seeing a lot of positive data, believe it or not.
I think the question that on the market's mind, Anthony, would be, okay, but tell me what the story of the next 6 months is going to be, right? So as good as it has been, as decent as, it's hard to use these words, but however, whatever has been the case is no guarantee of what we're heading into.
Oh, past performance is no guarantee of future results. Absolutely. But look, the only thing that I am concerned about, and maybe this is what your question is on, is consumer confidence, right? I mean, consumers want to have clarity on these tariffs. And the fact that it changes from day to day, from hour to hour, from tweet to tweet, that's just not great. It also impacts businesses because they just, they want to know what the rules of the road are, and then they can plan accordingly. It's just tough to do that when the tariff situation continues to evolve on an hourly basis. So that is the one thing that I'm concerned about. Look, I'm unlike the last guest. I'm not a personal friend of President Trump. I have no way of knowing, where his head is at. But, one thing I think is very, very clear is that, to really calm these markets, we're going to have clarity on this whole tariff situation.
Is there any, and we're trying to be optimistic, Anthony, there's a lot of bad headlines out there. Is there any point to sort of what Kelly alluded to at the top, which is that we moan and groan about our car payments? I think the average new car loan is like $1,000 a month now. It's pretty, it almost is like a mortgage in some areas. If people delay or put off these purchases, theoretically, they're not going to have that extra cost. If the economy remains relatively okay, maybe robust, whatever it is there an upside to other things if we're not spending money on cars?
Oh, absolutely. Absolutely. I mean, look, at the end of the day, consumers have a finite number of dollars to spend, right? And so if they are sort of holding off on buying a new car because of higher, because of these tariffs on imported cars, then that's more money to spend on other things. Maybe that's clothing. Maybe that's taking a nice vacation. Maybe that's going out and eating at a restaurant. Maybe that's buying a new TV. I mean, it's a zero-sum game.